Hello, I'm Kamal Santa Maria. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, South Sudan, civil war, rising poverty and a shortage of cash. Is there any good economic news in the world's youngest country? And just what's happened to all that oil wealth? Also this week, Saudi Arabia, it's opened up its financial markets to the world, but what does that actually mean for the real economy? Can Riyadh get people into work and break its dependence again on oil? And Formula E, electric that is, no vroom vroom here, just the squeal of tyres, which makes us wonder, is this the future of motor racing? A more sustainable model, both environmentally and economically. Hello everyone, nice to see you again after a break away from the studio. This week we are zeroing in on what is almost always tagged the world's youngest country, South Sudan. But we've got another angle, and that is the world's youngest failed state. It's not there yet, but it's not far off either. There are accusations of bad governance and stoking ethnic tensions. There is civil war, and all the supposed oil wealth just isn't coming through. What does all that mean? Well, where do we start? Rising inflation and poverty, which according to the World Food Programme has left some 3.8 million people hungry. Those figures are from April of this year. Armed conflict has meant South Sudan's only producing a third of its oil capacity compared with 2011 levels, which in turn means revenues are only down to this, about $100 million a month. Then you factor in transit fees to use the pipelines through Sudan to the north, and it means South Sudan's only making that about $10 a barrel on its own oil, which makes the global price of around $60 look like a small fortune. And I'm afraid it doesn't stop there either. The currency's taking a hit. The IMF says debt is equivalent to 50% of oil reserves. And of course, in amongst all of this, local businesses are feeling the pinch too. Here is Catherine Soy now in Juba with their stories.
Water bottling companies are some of the industries that have been hardest hit by the dollar crunch in South Sudan. Many companies like this one depend on American currency to import raw materials.
We have stocks that can last us for a week and containers at the port in Kenya. If we don't get dollars at the good rate to clear the containers, then we'll also be forced to stop operations.
Because of the fall in global oil prices and the conflict which started in 2013, oil production and sales are low. Oil is the only foreign exchange earner for the country.
This is what makes the plastic. The plastic is then blown up to bottle size, but the granules have to be imported, and this needs dollars, and they can't access dollars from the bank, and the black market rates is too high.
When we visited this factory in March, it was running, but with huge overhead costs. Now the machines have gone quiet. People have lost their jobs.
Half of Juba we were supplying, and right now we cannot even afford to do anything.
One needs a letter of credit from the government to access dollars from a bank at a reasonable rate, but those are difficult to come by. The black market is thriving and trading at roughly 4 times the official rate.
Government must be very concerned now. What we know, government may be depending so much on the borrowing from the central bank. And this one will be at a very high cost, so we are going to see a very huge inflation.
Many people have said that South Sudan's economy is edging dangerously to the verge of collapse. The government denies this.
South Sudan is not in the verge of any collapse, whether economics or political or otherwise. So anybody who says that is a bad witcher. He's witching bad for South Sudan. And we treat such people as, as people who are actually enemies of the Republic of South Sudan.
But times are tough for almost everyone in the city. This woman's living cost has more than doubled in the last few months. Many people here believe if the conflict ends, things will get better. Their leaders are set to resume peace negotiations after previous talks collapsed. She, like many others, remains cautiously optimistic.
Well, how well placed is that optimism? Let's bring in James Alishgarang to discuss that. He's a South Sudanese economist with the Ebony Center for Strategic Studies in Juba. Mr. Garang, I'm trying to decide where we start here, actually, when you're talking about your country's problems. It seems to me, though, simply the biggest problem is violence, and that until there is some sort of peace in South Sudan, the economy just cannot flourish.
Yes, I do agree with that. As long as there's no peace, the economy of South Sudan will continue to be in problems like the way it is today. If I may just add, there are three crises that have made the situation to be worse. One that you know of is the shutdown of the oil in 2012. That somehow crippled the economy of South Sudan. And then you add to the mix the current conflict, which also led to the production of the oil to be cut in some states. And the third is the falling global oil prices. So these three things have made the situation of the economy in South Sudan to be worse. And above all, unless war stops, things will continue to be bad.
Okay, so let's deal with those things one at a time then. We're going to start with the oil problem because I think that's probably the most important. South Sudan is not producing enough oil. It is not selling what it is producing at a high enough price. Can it do anything about those problems now so it can start getting in some money now? What do you think?
At the moment, not much can be derived from the oil. As you said, the global oil prices are not rising high enough, and if they do, that would be a long-term thing. Number two, the production of the oil in the affected states of Upper Nile and Unity area will not go up to the pre-crisis level until the war stops. So those two conditions at the moment are out of the question. What we may hope for is some economic reform inside the country. As of this year, in May, to be precise, May 5th to May 6th, the government of South Sudan reconvenes a meeting called Consultative meeting on improving the economic situation in South Sudan. And in that meeting, number of proposals were put forward, one of which was the realignment of the realignment of the exchange rate in the currency market. As you may have heard, or you may know today, there are two parallel rates in South Sudan, and these have hammered the economy. One is that the prevalency of the currency exchange rate, official one, and then there's a black market one. So if you realign the two, somehow, that would be one way to get the economy going. And number two is just closing the loopholes in all areas. One is in the tax, broadening the tax base, and as well as closing the loopholes that are in tax administration. So these two areas were proposed.
Am I right in saying, Mr. Garang, that the South Sudan Central Bank went into the process of printing money about, I think it was about 18 months ago, to try to meet a budget shortfall? That seems to me to be a dangerous sort of move. We've seen it in other African countries, Zimbabwe particularly I'm thinking of, and long term it just can't be good for the economy.
Yes, deficit financing was, when the government could not raise enough revenue from the oil, it went to the central bank and it dipped its hands into reserves that may have been there, and it also went into deficit financing, which is essentially printing money. And in that way, it brought about two impacts. One, it put a lot of pressure on prices, causing inflation, and number two, it exacerbated an already existing realignment or misalignment in the currency market. So yes, continued deficit financing may not be a way out of this crisis.
All right, so tell me then finally, as an economist, as a South Sudanese yourself, what sort of hope do you have? Do you feel that there will be any light at the end of the tunnel at some point?
There is this attempt to reunify the different factions within the party. This week, there was a hopeful sign that the former Secretary General, Pagana Mom, and some of his team members came back to Juba. The fact that they are coming is a hopeful sign that somehow or somewhere along the line, peace may come. And if peace comes, production is going to pick up in the areas where it is now down, and that would be good for economy. Number two, government is also going to cut down on military spending, because at the moment, it is way, way up there in the sky. So those things, plus above this all, what underlies is the result of the expectation. Expectation play a big role in price formation and also in informing the market. And if the market knows that peace is coming, prices may stabilize in the market somehow. That's what I hope for.
James Garang talking South Sudan with us this week on Counting the Cost. We thank you for your time. And still ahead on Counting the Cost, motor racing, but perhaps not as you know it. There's no roar of engines in Formula E. Later on, we look at a cleaner, quieter sport that could make going electric a bit more popular. To Saudi Arabia, a G20 economy which was almost impossible for investors to actually gain access to. But earlier this month, all that changed. Saudi Arabia opened up its $500 billion market to global investors, though to be fair, you and I would still find it difficult to buy stocks. So why is Saudi Arabia doing this? Well, it's been in the works for a while and is part of wider reforms, but you could also point to the falling price of oil right now. The Saudi economy is expected to slow to 2.7% in 2016 and run a fiscal deficit of around 20% of GDP this year. Saudi Arabia does want to diversify its oil-based economy and in doing so create opportunities for a growing youth population. More than 30% of its 24 million people are under the age of 14. The Saudi stock market is expected to become the 7th largest emerging market after China, India, Brazil and Russia. Note, it is the only Middle Eastern one in that group, so it could be something of a game changer for the region. But does simply opening up a market have a huge impact on the local economy? After all, not all of us are investors, are we? Let's discuss with John Sfakianakis. He's a director with the fund managing group Ashmore Group. He's in Riyadh for us. John, tell me about how we separate out this story, because you've got the stock market that's being opened up, but you've also got the real Saudi economy, the everyday economy. How do you separate the two, and how will the opening of the market impact the other?
Well, first of all, it's an important step because Saudi Arabia becomes far more globalized by opening up its market. And it impacts the real economy in many ways because companies will be able to tap into the stock market to expand. So in order for them to raise capital, instead of just going to the banks, they'll be able to go to capital markets, to the stock market, and raise capital in order to do what is needed. But also for the average Saudi who is invested in the stock market, it's quite important because that means that over time the market will become transparent, more governance oriented. It's going to be geared by research. So it's going to have all these important principles that other stock markets are guided by. And remember that the region has been advancing towards opening up its stock markets, especially Qatar and the UAE. And Saudi Arabia, being the largest economy in the Middle East, cannot be left behind in not being able to open its markets to direct foreign investments. So it's a very important part, just not only the real economy, but the whole economy.
And for the average Saudi who doesn't invest, the one who goes to work and comes back and lives an everyday life, what about them? Do they see any long-term impact? I know short-term that this is about bringing investors in, but long-term, is a Saudi person, a Saudi family going to see some positive impact?
I think it's going to limit volatility. That's something important. And we see that in many other markets that have this transcendence into more mature markets. So definitely this will help the average Saudi who has invested in the stock market and he doesn't or she doesn't see volatility. That's limited. And also it's based on research, it's based on institutional measures of looking at the stock market. So it moves away from being retail oriented to more institutional. So for the average investor, this is good news. For the average person who is sitting at home saying, what's in it for me? It's good news because they're able to smoothen out these processes of volatility.
These reforms, John, these changes, they obviously have been some time coming. And they don't happen overnight. But the timing becomes interesting, doesn't it, because of the price of oil being so low. I mean, does this perhaps take on more significance?
I think that it has nothing to do with, the price of oil. The price of oil has gone down definitely, but it doesn't impact the way the Saudi policymakers look at the economy, and especially the stock market. The opening up of the stock market was part and parcel of a series of measures that were taken since 2005, since, for instance, Saudi Arabia's accession to the WTO. So this was something that was in waiting, and it happened, especially now as King Salman took accession to the throne, because they want to continue with these reforms. But I don't think it has anything to do with falling oil prices. It had to be done because Saudi Arabia has to be included in the MSCI Emerging Markets Index, and in order to do that, it has to open up its market to direct foreign investments.
No, okay, fair enough then. It doesn't have anything to do per se with the prices coming down, but I guess what I'm saying is that with lower prices, it becomes part of this greater Saudi Arabian push to diversify away from oil. It becomes, because of the low prices, a more opportune moment.
Yes, absolutely. It's part of the process of diversifying the sources of capital in many ways. And the only way you can do this is to open up your market and invite foreigners to come in. And this is very important as Saudi Arabia tries to diversify. And it's also important to indicate that the Saudi stock market is not just about oil. In fact, it has hardly any direct representations of oil. So Saudi Aramco, the national oil producer, is not directly quoted in the stock market, although they do have a company that is a joint venture that is quoted. But Saudi Arabia's stock market is more than just oil. It has to do with demographics, with the consumption story, the growing middle class. Per capita income now is at $25,000. So it has a lot of sustenance and sustainability over the medium term to offer to the world a story that is beyond oil. So in that sense, they have to diversify that story, and it's an important story that carries through, and investors are seeing it today, and they are investing in these very same companies that are away from oil.
Just quickly, John, can this all help with jobs as well? I'm always conscious, particularly in the Middle East, of young people coming through the system and needing jobs. Simple as that.
True. If the economy cannot diversify, and if the economy cannot create jobs, that is a serious challenge, no doubt. And that's a problem for not just the Saudi economy, but other Middle Eastern economies, wherever we look at, east or west. So the Saudi economy, since 2011, has created about 1.1 million jobs for Saudis in the private sector. This has to continue because you will have many more Saudis looking for jobs. And I think by diversifying the sources of revenue and opening up the stock market, making a more competitive economy, then you create more jobs for locals. And that's an important principle and an important goal for the Saudi policymakers to keep abreast.
John Sfakianakis with the word on Saudi Arabia's new open market. Thank you, John. Finally this week, Piquet, Prost and Senna. These are some famous names when it comes to the world of Formula One racing and, as it happens, Formula E racing. Listen to that. That is the sound of some of the nephews and sons from those families now driving in this altogether very different league. Electric cars, hence the E. So as you hear, no roar of the engine, just the squeal of tyres. Formula E's coming to the end of its first season, and it's been drawing in the crowds with its more family-friendly style. Plus, it's working on the principle of being more sustainable, both environmentally and economically. The final race of the season happens in London. That is where Alejandro Agag is for us now. He is the CEO of Formula E. It's lovely to have you on the show, Alejandro. You have spent, I believe, around $100 million on trying to get all this off the ground. Would you deem it a success? Has it exceeded your expectations? Has it reached expectations? How's it gone for you?
Yes, I think we definitely succeeded or exceeded expectations. This was a really challenging project to put together. There were no electric racing cars in the world. There were no cities that were going to host these races. We had to put everything together in a period of 2 years, and now we come to London, the final of the championship, after races in Beijing, in LA, in Miami, in Monaco, and with a very, very good championship going on, so we're very happy.
I must say, it interests me, and I'm not someone, I know a bit about Formula One racing, but I'm not a fan. But this idea of Formula E does interest me, the type of event where I think, if I was in London, maybe I might go and see that. And I wonder if this is part of the success, Alejandro, that you can get people interested because it's different, because it's environmentally friendly, because it's more accessible to people.
Yes, it's basically a radically different kind of race. We race with electricity, which is clean. This is a non-polluting motorsport, which is first time ever. And also we race in the center of the cities. We bring the show to the people. In London, we're going to have over 60,000 people coming to the race, downtown London. So that's really a first, and that's what people like.
Cool. On a slightly more capitalist note, are you making any money from it yet?
Well, we're actually on a really good way to make money. This is obviously a commercial enterprise, even if it has this sustainable aspect. Obviously, we're not a charity. We have big investment funds behind us. We have our major shareholder, Liberty Global and Discovery Communications, which is the major cable company in the world. And of course, they want to return on their capital. But we are in a good way to make that happen. And sponsors are very attracted to this concept because it's sustainable. And big corporations all over the world are now also fighting for the green agenda.
Okay, so inevitably we get to some sorts of comparisons between Formula E and Formula One, but as you've described it to us here, they are very different products. Now, I was going to ask you if there was something from your success in Formula E which you think could be applied to Formula One, but I'm starting to think that actually the products are so different that they may not come together like that.
Products are very, very different. We don't compete with Formula One. We think we are quite compatible because we race in different places with different technology. But, for example, we give a great access to social media. Our fans can vote for their favorite driver, and the 3 drivers who get more votes get an additional boost of energy during the race. So fans can actually have an interaction, an effect on the result of a race, of a sport. I think social media is something that everybody needs to open to, and Formula One, I think, it's on the right direction on that. They have just started, but I think that's one thing that we could do very similarly.
Yeah, thing with Formula One is that they're losing audiences, and it's become, I don't want to quite say a monopoly, but it's perhaps become a bit, stagnant, a bit predictable for the teams and for the fans. I wonder what else could be done aside from, injections of cash or changes in management structure and these sorts of things. What could be done to revitalize the sport based on what you've done with Formula E?
Well, really, it's not easy for me to criticize Formula One. I was involved with that world. I had my own GP2 team, actually with a Qatari partner, with a Barwa company for many years. And I was in the world of Formula One, let's say. But definitely, they've been there for a long, long time. And, when things are there for a long time, they get a little bit repetitive. But I think it's an amazing franchise, a great brand. Formula E just wants to do things differently. And, for example, the level of noise we have, the level of sound, obviously, of electric cars is lower. So we're really good for families with children, for example, which, is a bit more difficult when you have a high level of sound. So, they're 2 completely different products, but I wouldn't want to give any lessons to Formula One. I think it's a great franchise.
Now, you make a good point about the sound, actually. I used to live in Melbourne. I remember I couldn't believe how far away from Albert Park you could actually hear the sound of those Formula One cars. It was extraordinary. Anyway, you mentioned you had a Qatari sponsor in your previous motor racing existence. What did you make of the news that came out this past week about the joint US-Qatari consortium wanting to, take $1 billion stake in Formula One? It's pretty interesting.
It's very interesting. I saw that in the press yesterday in Financial Times. There has been a few times already rumors of a potential Qatari interest in acquiring Formula One. I think Formula One is definitely a good investment, and definitely the Qatari Investment Authority and the different groups are very smart investors. So it could make sense, but obviously if they finally buy it, they will have obviously a big task ahead of them to push it ahead and to really come to the new generation of fans. So it's at the same time a great opportunity, but a great challenge.
Just finally, Alejandro, the technology that you're putting into the cars for Formula E, tell me about how that could feed back into the electric car automotive industry. It seems that the holy grail for that is to make it truly sustainable so that cars have proper range. You would never have to fear about running out of battery. Is there something coming from the Formula E technology which can go back into electric cars?
Well, you're touching exactly the most important element, which is battery. And what we want to do in Formula E is to be the place where all these new technologies, new battery technologies, new electric motor technologies, new fast charging technologies are tested, are developed, and then are implemented on the road cars. Motorsport has played this role before. From Formula One, you have even the rear view mirror, the carbon injection, the fuel injection, carbon brakes. So Formula E wants to play the same role on electric cars. Battery is the name of the game. If we achieve to multiply by 5 or by 10 the energy that you can store in a given battery, basically everybody will drive electric cars.
Maybe one day. Alejandro Argo from Formula E. Really interesting talking to you. Thank you. And that right there was our show for this week, but there's more for you online at aljazeera.com/CTC. It takes you straight to our page, which has individual reports, links, and entire episodes for you to catch up on whenever you want. You can also get in touch with us by tweeting either me at Kamal AJE, our business editor is at Abid Oliver Ali, and do use the hashtag AJCTC when you tweet us, or drop us an email. countingthecost@aljazeera.net is the address. That is it for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. The news on Al Jazeera is next.